Global markets steadied on Wednesday after a sharp technology-led sell-off, but investor caution remained high as concerns over stretched artificial intelligence valuations, uncertainty surrounding the U.S. Iran peace framework and expectations of further U.S. interest rate hikes continued to drive sentiment. Technology shares edged higher ahead of earnings from chipmaker Micron, whose products are closely tied to the AI boom. However, analysts warned that recent market swings reflected growing instability, with investors increasingly turning to traditional safe haven assets. European stocks were broadly flat despite sharp moves in individual sectors. Shares of German defense giant Rheinmetall plunged 15% following reports that Berlin could scrap a delayed multi-billion euro frigate project, though gains in luxury and technology stocks helped offset losses. U.S. stock futures rose between 0.2% and 0.4%, while the U.S. dollar strengthened for a third consecutive day, reaching its highest level in a year against a basket of major currencies. Analysts said the dollar continued to benefit from expectations that the Federal Reserve could raise interest rates again this year, as well as lingering geopolitical concerns linked to the U.S. Iran conflict. Some strategists argued that markets may be overestimating the likelihood of additional rate hikes, particularly as energy prices continue to ease. Oil prices fell more than 2%, extending recent losses and hovering near 4-month lows amid signs that tanker traffic stranded in the Gulf is gradually resuming movement through the Strait of Hormuz. Traders remain cautious, however, as Washington and Tehran continue to offer conflicting accounts of key elements of their peace agreement, including nuclear inspections and future arrangements concerning the strategic waterway. The euro remained under pressure, trading near its lowest level in a year at around $1.1345. The common currency has lost more than 2.5% so far in June and is on track for its worst monthly performance since July last year as investors scale back expectations for further interest rate increases by the European Central Bank. The Japanese yen also weakened, trading around 161.7 per dollar and remaining close to levels that have previously triggered concerns about official intervention. Minutes from the latest Bank of Japan meeting showed policymakers discussing rising inflation risks, with some members advocating faster rate increases after the central bank lifted rates to a 31-year high of 1%. Gold prices extended their decline as the stronger dollar and rising interest rate expectations weighed on the precious metal. Spot gold fell 1.5% to around $4,045 an ounce, nearing its lowest level in 2 weeks. Bond markets were relatively stable, with the yield on benchmark U.S. 10-year Treasury notes easing slightly to 4.48%.